India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Surabhi Upadhyay. With me is Nigel D'Souza. We'll have Prashant joining in shortly as well. And yes, thank God, it's Friday. We have woken up to cues which are not too bad, but there is some consolidation in the US markets. We'll see how it goes. But Nigel, this week, the bulls have been fighting back the last 2-3 days.
Well, what a tumultuous start actually to the week. And from there, we have only seen a recovery. So the bulls actually would like to end the week on a strong note. A good fight back, but you always like to go into the weekend on a high. So let's see whether or not they can manage that. Plenty of earnings now action as well. So let's get straight to it, Surabhi.
Because of the earnings, it's not feeling like a Friday. Because there are so many big numbers to go over.
And then you have the big budget event as well that's coming up. And Trump is coming next week as well. So, you know.
Charged up.
Absolutely.
All right, so let's quickly take stock of the cues. So the close on Wall Street was largely negative, particularly on the Nasdaq. And this is despite the fact that we had pretty decent retail sales data coming out of the US. Numbers were in line. I mean, the growth that they've been talking about, 0.4% month-on-month growth in December retail sales. That was all right. But despite that, the market chose to cool down. But the fact that the retail sales data and the inflation data this week has been fairly positive, that continued the cheer on bond yields and on the dollar. The US 10-year yields slipped further overnight, and the dollar continues to move away from that 110 handle as well. So that's the good news for equities. But the equity market also chose to be a little range-bound. There we go. We've got, look at that, dollar index below 109 finally. So good news coming in over there as well. Now, just to talk about some of the cues across Asia this morning, markets are a little mixed because they've picked up this slight weakness on Wall Street. And also, we're looking out for lots and lots of data from China this morning, including the GDP numbers, including fixed asset formation, retail sales, and obviously the industrial production numbers. So it's going to be a very data-heavy, packed morning from China, and the numbers will start trickling in soon enough. Ahead of that, the action is fairly mixed. By the way, speaking of China and the US, yesterday the Nasdaq was down. One of the biggest culprits in the Nasdaq was Apple. Apple shares were down almost 4-5%, and this because of concern that their sales in China are not picking up. They're not as hot as the company would have liked to see, and that concern was playing out on that stock. So just thought I'll put that on the table as well. Anyway, so the short point is that global equity markets are a little cautious today, though the cues from the bond market and the dollar index are very, very supportive. Now let's come back home and look at the setup over here. The Nifty's spent the week in consolidation. So if you're looking at the tally so far, it's more or less flat. The Bank Nifty has done better with a gain of almost 1%. And the mid-cap index, at an index level, it's been range-bound. Obviously, it's been all about individual stocks. Very quickly, fund flows. It's the same situation, same picture that we talk about day in and day out. Again, a net sale of about 4,300 crores from the foreign institutions. Domestic institutions were net buyers, but they bought stock worth about 3,000 crores today. Like Nigel's been pointing out, it's going to be very, very stock-specific and earnings-driven. Which is why let's look at just quick headlines from the majors, the index majors that reported yesterday. Infosys is a curious case because the numbers have looked very good. The constant currency revenue growth is 1.7%, which is ahead of estimates. The margins have increased in line with estimates. The commentary looks pretty solid. The company is saying that the deal pipeline is improving. There is sign of discretionary demand pickup. But despite all of this, and the guidance has been increased, by the way, but despite all of this, the ADR ended down 6%. Why? Well, one guess is that they'll be taking their wage hikes across 2 quarters. Maybe there's some impact over there as well. So that's Infosys. Reliance was a near all-round good show. The retail numbers are scorching. The retail business quarter-on-quarter growth is phenomenal, way ahead of expectations. The EBITDA has surged almost 17%. The top line is up about 18% quarter-on-quarter. The digital business has done really well. The telecom ARPU for Jio is finally above the 200 mark. So good news coming in there. And even oil and gas, the sequential recovery. O2C has done very, very well sequentially as well. So it's an all-round, good performance from Reliance. Axis Bank, I think the street will quibble a little bit here and there. People will tell you that maybe the growth in the business at 9% advances growth is not too hot. And more importantly, there's going to be some chatter on asset quality because their slippages have gone up quite a bit, so especially if you look at it quarter on quarter. So Axis Bank, let's see what the market verdict is. Then you've got, I mean, every day you'll have some hits, some misses. The misses probably this morning is Havells. Havells is a bad number all round. Big compression on margins coming in. So it's going to be very, very earnings driven. I'll quickly, hand it over to Nigel with some of the earnings today. There's Jio Finance, there's SBI Life. After HDFC Life, we have to watch what this one does. Is Wipro, Tech Mahindra, ICICI Lombard. Yeah, it doesn't feel like a Friday. It's a very heavy one, Nigel, for sure.
Well, that's right. And the bulls, they'll be feeling good with the kind of pullback that we've seen the last few sessions. They'll want to end the week on a high, and there'll be that temptation to go ahead and buy the dip. Well, let's tell you about the top cues that we've been tracking. Well, 2 out of those 3, well, they are relatively better in comparison to what we saw at the start of the week. So you have the dollar index that's cooled off to less than around 109, so you like that. And you have, the yields as well that were heading towards 4.8%. They've cooled off a little bit, and Brent crude prices more or less stable. So mostly these global cues are in favor of us. Moving to what are the FIs during yesterday's trading session. No surprise, they went ahead and they added some shorts. Close on 7,000 contracts is what they added on the short side. Takes their total short position to around 83%. And if you look at it in absolute terms, FIs in index futures, clients in index futures as well, you'll see that they're opposite ends of the spectrum. Clients are net long, FIs are net short. But if you're looking at the stock futures, then both of them are on the same page. And in yesterday's trading session, you had some addition on the long side, on stock futures longs from clients by close on 40,000 contracts, while the FIs, they unwound some long positions on stock futures. Net, long on stock futures, while on the index, they're on opposite ends of the spectrum. Moving to the options data, then we have a couple of strikes that were fairly active, 23,300 call, 23,000 put as well, which helps us get a sense in terms of the numbers. So we should get some of them up for you on the screen, in terms of the numbers that did come out. You have resistance. Well, that comes in at around this 23,350. Very, very important mark. You'll want to close closer to around this level. And that's a bit of a congestion zone. The support, though, 23,000, don't want that mark to get broken on the downside. So in the near term, I think we're in a bit of a range till we get a bigger Q coming in there. And if we can get past this 23,500, then the bulls will be hoping that we can get closer to around that 200 EMA, which is at around the 23,650 or thereabouts. One quick word with regard to the numbers. Infosys, that's the one that ended at the low point of the day. It could be a blessing in disguise. Though overnight you had the rates that come out that indicated the stock will be a little bit softish, but I think that dip can get bought into, and expect the stock to end off the low point of the day, because towards the end of trade, there was a lot of shots that got into the system, and that could be a blessing in disguise. So Infosys should recover from the low point of the day. On Reliance Industries, it's been the one that's been out of form. It ended at the high point of the day. But these numbers give reason to maybe, in fact, Reliance Industries now gives up that recent underperformance. And maybe it could be one of the leaders from here on. So Reliance Industries is the other one that we'll be tracking. Infosys comes off the low. Reliance could lead in today's trading session as well. And the Nifty Bank, I've been making this point for the last few days that it was making lower highs and lower lows. Well, now the time has come when you wanted to make a higher high. That's yesterday's high and yesterday's low. So you'll want, both these two to be higher in today's trading session in comparison to yesterday. Temptation will be to buy the dip. Let's see whether or not the bulls can drive home the advantage getting into the weekend.
Well, absolutely, Nigel. And, we've got T minus how many days? 2 days, right? Today, 2 trading days, today and on Monday. Because Trump inauguration is on Monday night, 10 o'clock.
And Monday is a holiday, US market holiday otherwise. Because of Martin Luther King Day, I think so.
Okay,
yeah.
so then, so
it's
for
a
us,
3-day weekend, gearing up for the big event. As far as the US goes.
T minus 2, almost making it sound like some Jurassic Park version.
Some rocket launch. Speaking of rocket launch, did you guys see the visuals that came out?
The ISRO docking.
The Starship, Mr. Musk's Starship.
I was talking about the ISRO. So we've managed to dock a.
Yes.
So it's been, absolutely. I think great things are happening in space. We'll talk more about this. I just want to quickly, round up just one additional thing apart from what we've already kind of mentioned. So, as I said, I mean, you're basically markets are awaiting Trump 2.0, and that's the big theme. And everything between now and actually when he does take over on Monday night is going to be a little bit of volatility, a little bit of noise. So don't chase moves. That's essentially been the advice. And I think we've already highlighted, and we'll just quickly flip through the sort of graphics there. Equities were down, yields were down, dollar was off a little bit. So that kind of a day. December sale, the retail sales, etc. We've spoken about. Oil prices down about 1. So the thing is, you had the Treasury Secretary nominee, Scott Bessent, in a hearing before the Congress. And this was the interesting bit, right? Now, remember, Scott Bessent was seen as this market person and as someone who will be pragmatic. But he actually came across as a tariff hawk in the Senate hearing. And I'll tell you why. He said that a 10% tariff hike means a 4% currency gain. So he was talking about a tariff forex beta being about 0.4% or so. Is that going to be really the case? And I'm not sure whether he was whether he was using the 10% as an example, or whether he was saying that actually, we'll tariff at 10%. I'm not very sure, but this was interesting. And he said, well, foreign companies, because the dollar will gain, foreign companies will have to actually drop prices to stay where they are in terms of market shares. And so consumers will not feel the pinch of this 10% tariff hike. So I thought that was interesting. Remember when his sort of appointment was first announced, yields came off sharply because of exactly the reason what I said, which is that he's essentially seen as pragmatic and this market person, etc. But last night, I thought he came across as a very clear kind of tariff guy. We've been, of course, putting out all these levels, etc. So, we on the Nifty, just one level, we hit the 40 hourly exponential moving average, and then we found selling pressure there. So that becomes the level to take out. It is about 23,367 is that level as of yesterday. So keep an eye out on that. And Nifty Bank managed to close above the 40 exponential average. And the next resistance zone here is 49,785 to 49,850 or so. So that's the number. On the downside, again, I've not been putting out the downside levels for the last 2 days, but it's the recent lows. Monday's lows, basically, for both the Nifty and the Bank Nifty, which are kind of well advertised. It's almost consensus now that, this is just a bounce and eventually you're going to drift lower. But consensus rarely ever plays out in exactly the same fashion. So be mindful of that. There's a lot in the mix right now. And of course, the big one is going to be Trump taking over on Monday. And it'll depend on what he says. Maybe it's going to be, it could be anything, right? Monday onwards. But we know we have some idea of his inclinations and what he'd like to do. But it's all relative and what's priced in and what's not. So in that sense, expect volatility. Chetan.